Bangalore Chamber of Industry and Commerce. We welcome you all for this webinar providing an overview of green financing and green deposits, role of banks and fund utilization. The session is addressed by Dr. K.S. Ravichandran, who is the co-chairman of our Sustainability Expert Committee, BCIC, and Managing Partner, KSR and Co-Company Secretaries, LLP. Thank you very much, sir, for structuring this session. And I also welcome the leaders of the committee, Mr. Mohan, who is the mentor and who is the former Chief Sustainability Officer at Bosch Limited, and Mr. Rajesh Jha, the chairman. He will be joining the session shortly, who is the Country Environment and Sustainability Manager, ABB India Limited. And thanks to all the members of the management committee and leaders of our expert committee who have joined for this exclusive webinar. So before I hand over the stage to Mr. Mohan for delivering his opening remarks, we would like to briefly introduce Dr. K.S. Ravichandran. And of course, he do not need any introduction. He is a very well-known subject expert. Yeah, he has over 2 decades of expertise in company law, securities laws, foreign exchange management, and environmental laws. Dr. Ravichandran has authored several influential books, including Duties and Liabilities of Directors, CSR, ESG, and Charitable Institutions, and has written over 1,000 articles on corporate laws, and he is also the frequently addresses various conferences, seminars, and workshops nationally. His works such as Treatise on Corporate Lending and Corporate Social Responsibility, Emerging Opportunities and Challenges in India was widely recognized in the legal and corporate community. Thank you very much, sir, for this support to the Chamber. The Chamber acknowledges the support of all its annual sponsors for their support in the activities over the year. And if any companies are interested towards the sponsorship, please do write to us. We are on our 50th year Golden Jubilee, and we have lined up quite a few flagship events throughout the year. And now I request Mr. Mohan to take it over from here. Over to you, sir.
Thanks, Rupa, and good evening, all the representatives who have joined this webinar. First and foremost, KSR, K.S. Ravichandran is a very experienced and seasoned, I would say, authority on various aspects related to sustainability. And as you know, India wants to become a manufacturing hub, not only for internal consumption, but for exports. And with many legislations coming up in, especially in European Union, where we have quite a bit of exports, it is become mandatory to comply by these requirements. Also in India, with BRSR at the helm, there are various regulations and requirements which needs to be taken up. And the challenges what we have currently in India is the data traceability, the data quality across the value chain, whether it is tier 1, 2, 3, or tier N, wherein the disclosures are becoming mandatory, and also the data has to be right, otherwise it will have serious implications for the industries. So having said that, Government of India has come out with various, initiatives and incentives to support industries. And even in the recent, the budget, they have allocated quite a bit of funds for the useful use by small and medium-scale enterprises, so that they are supported well and they become, matured enough to develop systems and then compete with other companies, worldwide. So this is where, especially for SMEs, it's very important to know this, what is available and what is the way this can be done, and what are the various ways this can be utilized and used to comply with the requirements. So this is where KSR today would be spending some time. I would request all the participants to be proactive, and you can seek clarifications wherever required. And I hope it will be very interesting. So over to K.S. Ravichandran. You are on mute, K.S.
Yes, sir. Thank you. Thank you. Good evening, everyone. We will be dwelling on this topic at length as far as possible and as far as time permits. It's a very interesting task the BCIC has undertaken, being part of the expert committee on sustainability. I will be able to say with a little bit of, we can say, satisfaction that we have been organizing programs to highlighting and making the various sustainability related subjects known to everyone in its endeavor to serve its members and the trade and business community, corporate, non-corporate. BCIC has been taking the lead to bring this subject, which is a futuristic subject, a buzzword today, on everything about green. And we will not be excluding, of course, talking about greenwashing also. I just want to say we will do a wholesome subject presentation one after another. You would have probably noticed that in the last program, just about maybe within the last 10 days, I don't remember the date, we had a very beautiful presentation on the carbon balance adjustment mechanism to highlight the point that the moment you produce steel or cement or chemical or anything, and textile and infrastructure industry not behind, we're going to have CO2 equivalent of emissions measured, and there is likely to be a CBAM tax or something. So, such important topics which are very useful to the trade and commerce, to the industry, to the various industry in the sectors. BCIC has been in the forefront, and I would say a torchbearer to explain the importance and significance it is receiving, this subject is receiving. And with that preface about our chamber and about the activities of the Sustainability Committee, we would like to this time on this at this beautiful evening discuss about this green financing activities. I have made a very short and a quick presentation on the subject. I'll be dwelling on the 2023 framework and 2025 framework of the Reserve Bank and the changes it has brought about, and also about the climate related, how the green financing focus is going to help Indian industry to work towards financing climate related projects, green projects, and what are excluded also. We'll be also studying about the various policy related paragraphs, how the RBI's master direction has been tightly brought about to bring the entire subject comprehensively so that to be used for the banking sector, and also the policy of the individual banks, and also some illustrative policy I'll be looking at, some illustrative impact report I'll be showing to you. That is a brief about the contents of the presentation. I'll share my screen for the purpose of the benefit of our members. You will find that the subject green financing and green deposits is, hope the screen is visible, correct?
Yeah, okay, sir. It's visible.
Yes. The sustainable finance system, ecosystem, is required to be created. I don't think anybody has any doubt about it. Ultimately, sustainability is going to be fundamental driver and denominator for every business operation. Existence is going to be discussed. Ability to sustain what is the level of our existence, ability to grow the business in a sustainable manner, and without hurting the various important elements in the society without which we will not be able to exist. So sustainable finance ecosystem has become a part and parcel of this larger thought of sustainability. And you know, at the point of time where we are now discussing, we have understood, at least I will say with confidence, that green management has become an expensive affair for the corporate. Today, to my experience and to my knowledge, because yesterday I was working on a plant for manufacturing beverage, and I find that green management is not an ordinary topic. Green management is supposed to be ingrained into the management heads for them to understand, map the data. I was calling yesterday this particular aspect as DAM. That is data first to be gathered. Data must be analyzed, processed, and used for management for their strategy building dams. So when I found when we are interacting with very large corporate, they may have the luxury of and wherewithal of several people working for gathering data. Today, in MSME sector, we do not have that kind of a input gathering ecosystem at all. Not to speak about strategizing, financing capital asset programs, introducing technology, removing emissions or reducing emissions. That are all high thought process. It will take, it's not even something which you can achieve in a day or two. So it is an expensive affair and it is an all round impact creating measurement. And mobilization of capital is a big subject. That is why we are now talking about green financing also. And it is about from the investor's angle when you see socially responsible investing. The features, I have only given a very brief idea of the features, very simple and very brief idea. If you see the features, it will be a deposit sort of thing from the banks, green deposits, typically Indian rupees. You can always fund for green projects. Interest bearing, of course, I'll show you for example, I think Indian Bank is offering up to 7.15% rate of interest on green deposits. Product structure, what is the tenor, rate, minimum amount, etc., is similar to regular fixed deposits. Key difference is it is ring fenced by the caveat that it has to fund the green use and deposit insurance provisions. All these things per depositor, there is some limit, which is of course the same credit guarantee. So interest rates are like this, hovering around. Of course, at the end of the day, it cannot be very high. It has to be something like this only, because green financing, the borrower also would expect, government also would want reduced rates of interest on the lending on the asset side. So when asset side is getting a very less returns, liability side cannot be flamboyant. But the satisfaction that a depositor like you and me will carry, that I am not only getting some small percentage of interest, but also I am interested because it is being used for some green activity. And tenors, of course, you can always put some number. And also standard benefits which are available will be no restriction on premature withdrawal of green deposits. This is not a problem at all because it's a big basket of deposits that are going to be generated. And there is, of course, loan against green deposits because we don't want any customer to say green deposits are agreeable, but I'm not having the benefit of getting some deposits or getting something like that. So this is all structured in such a way that it is remaining as far as possible attractive, as far as possible. 90 to 95% of the deposit value is going to be allowed for borrowing because a depositor may want money immediately for some purpose. So he will keep the deposit and also do some borrowing. And loan interest and all normal 1 to 2% will be more. And the tenure of the loan is, of course, the residual tenure of green deposit. It is natural. It's a common sense aspect that my green deposit ends with next year. So loan cannot be more than that period. Repayment is, of course, structured. It is possible for interest servicing alone so that you can adjust the principal against the deposit to the maturity. See, all these things are similar to this. Why the reason why I am telling this is green deposit need not be considered as a alien subject. It is structured and tailor-made to keep the depositors who are common man like you and me to feel safe, to feel the same level of satisfaction that they will have. and also to find the benefits and features in the similar way. Now, key providers. Scheduled commercial banks provide green financing, deposit taking NBFCs, housing finance companies, offering this green finance, the green deposit to the general public is encouraged by RBI so that the green finance ecosystem gets expanded, deepened to the level of depositors. Now, just in a bird's eye view, if you see Bank of Baroda, how much they have raised, 1,000 crore. Punjab National Bank, some 394 crores. Canara Bank, about 135 crores. State Bank of India, about 105 crores. Of course, a big bank. These are all some data. I just collected it. You may also be easily able to identify that. We have something like AU Small Finance Bank raising big money in green deposits. So you will be able to see the thing in the screen. For the purpose of understanding that green deposit is not something which is very different, which is very difficult. Given the fact that banks have raised this much money, you'll be able to understand the possibility of raising good amount of funds, and the scope is sky is the limit. We can say it is beyond the sky because emissions are piercing the sky and making hole in the sky. So sky is also not, I will say, the limit. If you take Karur Vaishya Bank, I found that some information is available sketchily. The power projects they have funded about 4, out of which 1 is commissioned. Under implementation is 3, some 639.77 megawatt of power. And GHG emission avoided is about 458.06 tons of CO2 equivalent. And there is an impact assessment report of 31/3/2025, and it has got some information. So the eligibility is for these are all the activities. When you raise money through green deposit and we are trying to finance projects, we should be able to know what kind of technology, what kind of purpose it is going to serve. It must be for renewable energy. Of course, the sample I have collected, most of the banks have gone for renewable energy. Well, I was trying to look at some big topics like carbon sequestration and all. Nothing has been financed so far. Energy efficiency and resource utilization, clean transportation, climate change adaptation, sustainable water and waste management, pollution prevention control naturally, green buildings. The green building certification recently BCIC had under the sustainability committee entered into a MOU for some Griha certification also. See, the activities are such activities which are oriented towards sustainability. Sustainable management of living natural resources, land use, and terrestrial and aquatic biodiversity conservation. These are all conservation or some of the green financing activities which are encouraged by the RBI's Master Direction 2025. And target sectors are clean energy, renewable energy, clean transport, energy efficiency, green GHG, greenhouse gas emissions reduction, resilience improvement through solar, etc., biodiversity, climate resilient agriculture. But exclusions are no financing of fossil fuel related extraction, production or similar activities. Through this, I will take you to the page number 8 of the policy also for you to read out what is actually in the directions. The regulatory framework, the requirements, policies, governance can be structured like this. You have a 2023 framework, but stopping here for a minute, you can see the 2025 also. 2025, I'll show you. Yeah. You see, 2025, I will straight away go to para number use of process, page number 8. Okay, so that you will be able to come back to the presentation immediately thereafter. You can see here use of proceeds. The allocation of use of proceeds raised from green deposits shall be based on the official green taxonomy. This is for identifying the sectors and the activities. You see there, renewable energy, the description is solar, wind, biomass, hydropower, etc. There is incentivizing adoption of renewable energy. Under energy efficiency, designing, constructing energy efficient, energy saving systems, and supporting lighting improvements, supporting construction of low carbon buildings, energy efficiency retrofits into existing buildings. So very important thing we are discussing about, because every sort of building there could be some possibility of banks looking at financing and also claiming that they have done green financing actually for reduction of the emissions or cutting down of the carbon and the energy consumption. Clean transportation. Clean transportation, electrification is today one of the things. Electric vehicles will be probably the future. And climate change adaptation requires infrastructure to be resilient, and projects aimed at infrastructure to be more resilient to impacts of climate change will be considered for green financing. Sustainable water and waste management is a subject which will be considered. Water efficient irrigation systems, because today we are going to have difficulty in ensuring we have clean water for all the purposes. So therefore we need to look at sustainable water and waste management. Pollution prevention, of course, is naturally and a very important subject. Green buildings, I have already told about it. It's a very important subject. The sustainable management of living natural resources is with respect to your agriculture, animal husbandry, fishery, aquaculture, forestry management, certified organic farming, biodiversity, and research on living resources are some of the projects which can be funded through green financing. And terrestrial and aquatic biodiversity conversion is about the blue economy or the coastal and marine environments, the biodiversity preservation, conservation of endangered species and habitats and ecosystems. In fact, in the afternoon, I was sitting just before the building on National Physical Laboratory for the Marine ecosystem. And you see here, certain exclusions, of course, these are all naturally, even if you are asked to say why we should not fund a project, you will definitely say, yes, I'm not going to fund fossil fuel producing projects now. I'm not going to do nuclear power energy. Direct waste incineration is not going to be alcohol, weapons, etc., etc. I will not permit it. Landfill projects, I will not permit it. And hydropower plants larger than 25 megawatt, I will not permit. This is all ordinarily a common man will also say, let us not do this funding using green financing. Funding is not prohibited. Green financing cannot be, we can't call funding these projects. And therefore, certain policies of the banks are tailor-made to ensure that these are all exclusions. And they definitely say that we are not going to fund at all. Existing funding to that projects, of course, they have to continue because it has to be sustainable. So these are all how so having understood that, we are now dealing with the PowerPoint presentation, coming back to the PPT. You'll be able to see there that there are some elements of these directions which encourage green products, at the same time prevents greenwashing. I will say why we say it is preventing greenwashing. It is preventing greenwashing because if you see the 2023 versus 2025, you will find, unlike the previous one, in 2025, it is mandatory for a board approved climate finance policy, which is very important because it puts some high level of threshold to become responsible at the apex level at the board. There is a need for looking at expected and achieved. This is what is very important. We should be able to, when I say expected, you are putting difficulty to the management of the lending institutions, unlike investors, that you should put some target. You should therefore say, what is my expectation? And then you see whether you have achieved it. So the language expected versus achieved should be understood not in an ordinary sense. It should be achieved, and therefore efforts must be taken towards achieving that. which is fundamental to any kind of policy. Because in the policy, when you are saying, I expect this much, which means you are applying mind on what can be achieved. And therefore, you are also working on that. Thereafter, you are achieving or not achieving, why it is not achieved. See what kind of responsibility is thrust through directions. This is number 2. Board approved policy, expected versus achieved. And the integrated policy is one aspect. Integrating the policy into credit policy is another aspect. Integrated policy is one aspect. Integrating it in your credit policy is another aspect. And not only that, in your stress testing, this is included as a parameter. This is number 3. Number 4, you should also know that there is a validation by assessment like BRSR under the SEBI regulations for the business responsibility sustainability reporting. How assessment is introduced, third-party assessment. Similarly, validation has become a requirement. Not that. Impact assessment report has to be generated. I wanted you to just note that these 5 important things have become part and parcel of this new policy. That is why it has become very important. Now look at the goal. How the management will perceive it. Management will perceive the climate-related financial risk. To manage it, how I will shift the portfolios. Can I shift it? Are there scope? Can I encourage my borrowers in MSME, non-MSME? Can I give them gyan? Can I give them some kind of beyond the call of the duty assistance to say, this is the technology. If I finance one borrower, I'll be able to really help several other borrowers to understand it, to look at transition technologies, to look at low carbon assets. So board is being pushed to identify. And when, as OECD said, when you push any governance requirement through the apex body, naturally it will definitely, we can say, percolate down until this. So innovation and green jobs are promoted. Economic growth is aligned with the global, national and global sustainability commitments. Now, you see, compliance, yes, no doubt. Compliance, audit, assessment, validation, reporting. All these are necessary for us for the purpose of understanding that we are creating a safe world for us as well as for our posterity. Publishing deposit policy is a requirement. Policy and financing framework in the website. Annual disclosures, requirement. How much you have mobilized, which sector you have allocated, how much you have allocated. What are the key impact indicators? What is the independent external review you are able to do it? How it ensures integrity? How the reporting helps investors, how the reporting helps the regulators, how the reporting helps you and me. And how do we address this big concept of greenwashing? And whether temporarily, if you park the proceeds in green deposits in some place and pending allocation for green activity, because it has to be done in a phased manner. We can't put all the money in the pocket of a borrower and say, take it and do it in next 3 years, 5 years. This has to be structured and disciplined. So there may be a period when I'm able to deploy it on the project. Pending such deployment, I'm able to put it elsewhere with some liquid instrument so that I'm able to pull it and put it. These are all normal banking activity. The framework does not envisage any penalty for non-allocation of proceeds towards green, but it is subject to supervisory and questions will be there. Now, as far as depositors, I have already said, there is a regular system of FD. There is a regular interest and whatever incentives that a depositor wants. There is a transparency. They will have the satisfaction, and they'll also be able to get, banks and NBFCs will be able to get some dedicated funding, improved profile, reputation building and all. And annual third-party verification and impact assessment is, as I already said, are very important outcomes. Now, when you see the publicly available consolidated quantitative data on green deposits, it's very less. as compared to today, very less. I think in the future is going to be increasing by banks and NBFCs. NBFCs is very, very less compared to banks. At least banks, they have some information. Now, the proceeds of green deposit in a balance sheet, they have to show. And it is eligible only for green projects as per the framework. So that is the policy. So customer who takes a loan against a green deposit, that is for his own purposes, which I said in the beginning of the lecture. Green deposit customer comes and says, I want a loan for me. That is a separate loan which can be regular loan. We can't put the customer also into difficulty saying you are borrowing against a green deposit, your own deposit. And therefore your loan must be utilized for some green activity only. I think he can borrow for smoking cigarettes, I will say, in a lighter side. The green impact arises how the bank is using it and how the deposit proceeds are used. Now, PSU green deposit. Some 9 banks, we have done some Excel calculation. The top contributors, the Bank of Baroda, PNB, Canara Bank, out of this 2,000 crore. Dominant, as I told you previously also, not like carbon sequestration and all. Renewable energy projects is the easiest low-hanging fruit because everywhere we are talking about solar, solar, solar. So, low-hanging fruit. Then comes global scale, landscape, how it is. Globally also is growing only. I will say the topic itself is growing, increased recognition, increased relevance. It's happening. At International Institute of Green Finance, they are developing some Green Finance Development Index. 55 largest economies are brought under this. France, according to the index, ranks first. And the top 10 countries, we were not there, but at least we know what are the top 10 countries. We are somewhere in 31, but India is, as Trump recently said yesterday or day for yesterday, India is not an ordinary power, it's a global power. We are going to definitely move up in the ladder. According to the Climate Bond Initiative Program, the global green bond issuances have grown 46% annually from 2014 and reached about $1.04 trillion as of 2020. And private sector accounted 56%. These are some data. And public sector about 30%, development banks about 40%. In 2021, green bonds have continued to grow, reaching a staggering 350 billion the first 9 months. According to OECD data, bilateral and multilateral climate-related financial flows to developing countries. So financial flows to developing countries, attributed to developed countries, including private finance. Now, what are the challenges? We know, naturally, every obligation is not going to be a cakewalk. There's going to be some challenge. Main challenge is how am I able to avoid greenwashing? But keeping aside that challenge, I say taxonomy has to be built. Sectoral criteria is required for consistent reporting of green projects. Data measurement verification. Data, I told you, dams. Data analysis, management, strategies. I also tell this particular thing always: thoughts, policies, plans, programs, and strategies result in achieving the things. Risk of green governance, greenwashing, I've already said. Independent assurance itself should not be something which is lacking in integrity. Independent assessment itself should not be like that. That is very important for us to know that. And MSME sector is difficult. MSME sector, as I told you, mostly it is like hand and mouth. So technology, investing there, educating the people, bringing them to the skill levels, it's going to be a very tough challenge. And stakeholders, regulators, banks, investors, corporate, all must collaborate. And BCIC is going to take part in this thing towards building a knowledgeable society in commerce so that we are able to contribute to our side as much as possible. When it comes to third-party verification, I wanted to read the para number 15 because the allocation of funds raised through green deposits during a financial year shall be subject to an annual independent third-party verification or assurance. That verification or assessment or assurance would not absolve the bank of its responsibility, because primary responsibility about end use of funds is that of the bank. That has got nothing to do with the assessment or assurance or verification. It has to involve necessary internal checks and balances, as in the case of other loans. So this is a very important paragraph. As I previously read out the categories of financing, use of proceeds, I wanted to read this also, and also read this explanation. A bank can engage any appropriate, reputed international agency, domestic agency for external review of all these green financing thing, third-party verification and impact assessment of green projects. Third-party verification report shall at the barest minimum cover the following. What is the use of proceeds? Are they used in the eligible green activities? What is the monitoring for end use of funds allocated? And what are the policies and controls, including project evaluation, selection, proceeds, validation, and information that is provided to the borrower, by the borrower to the bank? How do we validate it, and what reporting, and what impact assessment is another important subject which I have already dealt with. And impact assessment should be showing what is the project. Same thing. What are the eligible projects? Where I have put it? What is the indicator? What is the capacity created? How much is the energy emission, waste, water reduction, everything done. So impact indicators, I have given examples. Now I will take you to the report itself. This is a control comb I'll give, so that green deposit deployment and impact assessment for financial year 2025. UCO Bank has issued it. You see the coverage of it. 1, the introduction. 2, what is the scope of the report? 3, where they have allocated the proceeds. What is the portfolio of impact, and what is the project, and what is the assurance and the statement? What is the compliance? What is the conclusion? Now, I'll straight away take you to the allocation. It's a very small report only. They have given some introduction about green deposit policy, which they have formulated. And what is the report? What is the scope of this report? Here, this paragraph is interesting. You can see, I'll zoom it for your benefit. The UCO Bank has disbursed 45.70 crores out of 74.82 crores of cumulative green deposit raised in 4 tranches, and project drawdown was 24 October 35 crore, and December 2024 16.58 crores, Jan 2025 15.92 crores, and 7.1 crore for March 2025. These are all the green deposit mobilization and disbursement. Now let us see the project. See, this is a very interesting chart. They have put the money raised on the second column and money disbursed on the third column. Please see how much money they have disbursed. Okay, 45 crore of green deposit, 74 crores of green deployment. There is therefore no unallocated funds. Now, what is the impact? This is very interesting. I'll show you the impact. What they are saying is, this is again a sector wise, which I have said renewable energy kitna hai, like that you have to give on this. I am not very particular about showing this, but impact I'll tell you. They have put green deposits for financing 45.7 megawatt. In that, commissioned capacity is 28 megawatt. Solar photovoltaic power plant, that is solar power plant, in the state of Gujarat, operated by an operator called Indian Infrastructure Private Limited. And what they are saying is, it is commissioned in March 2025, 28 megawatt out of 47.5. And what the UCO Bank says is, because of the funding and commissioning of this project, there is a possible emission which is saved according to them. Emissions avoided. I'll tell you, the solar plant's output directly displaces electricity that would otherwise be generated from fossil fuel sources, predominantly coal-based generation in India. And therefore, once it is fully commissioned, the project's annual emissions avoidance is around 49,500 tons of CO2 equivalent. For the last financial year, the commissioned capacity was 28 megawatt. The project has avoided 6,521 metric tons of CO2. Of course, there is some small mismatch in the numbers because project itself is commissioned only in March 2025. So it is not that they have avoided the last financial year entirely, but this is only a sample of a particular impact report. I'll also show you one more document. Yeah, this document is nothing but I have taken a private sector bank's policy on green deposits, framework for green financing by allocation of green deposits, February 2025 of Karur Vaishya Bank, Consumer Banking Department. You can see here what they are saying is green deposit is an interest-bearing instrument, can be accepted from so many people. And what are the features of green deposit? And it is denominated in Indian rupees. And the framework is referred to. Of course, they have to modify it to 2025. And these are all the green activities which you saw in the RBI circular, what is permitted, and similarly, what are exclusions. This I have read already. So this is only to show you how a policy at the board level, bank level will be looking like. What they will say and what they will be, this what are the features of the deposit and all very natural. See, idea is to show you that there are some aspects which are required to be understood when we discuss this subject. So I have given you overview of what green financing, what green deposits, what are the regulatory positions, what are the internal policies, and illustrative funding and financing also. This is how it sums up. And of course, there are some paragraphs of the policy itself. I have already taken it through that difference between 2023 and 2025. I have also stated that. So overall, I will say India has brought out a well conceived, proper policy as well as action program supervised by regulators and capable of being inquired into by the depositors as well as investors. Therefore, it is already built in with safety and security to protect integrity, avoid greenwashing. That's all I would like to say. BCIC, I thank for this opportunity to explain some aspects of this subject. Thank you.
Thanks. It was quite interesting. Even for me, it was a good learning because it's more in terms of the language of the banks. But I think in the days to come, the deposit has to increase because of the legislation, across different countries. There will be more thrust on, India moving towards net zero. We have targets for 2030, 40, and 50. So many such activities has to be taken up. Projects has to be taken up to reduce the emissions, greenhouse gas emissions. So only thing is how to increase the deposit so that the financing is available for eligible projects.
Correct.
Yeah. So there are questions in the chart. The first one is on. You can see the chart. You can open the chart.
Yes, sir. I have already seen.
Yeah.
The question which are there in the chat box, I am seeing it.
Yeah. We can finish and then we can take the questions.
Yes, sir. Good evening to all. Nice to meet all of you. This national webinar is good. Okay, somebody else. Good evening, sir. I'm Kirtana, assistant professor, and I would like to ask about. I know she is giving an information. Sovereign green bond is open, and also there are any websites, green investors. These are all nowadays the task is made easy apart from Google. So each bank provides information in their website. Each bank's policy as of now is structured to align with the directions. In more granular way, in more theme-based financing, the banks have, to my knowledge, not come out. As Mohan was nicely putting it, its awareness is increasing. We will have to see depositors thronging before banks to put money for green financing, which will put more opportunity for financing green activities. The other point which I want to add here is not only depositors will push it when the awareness increases, it will also require for investors to take a view on the green activities funded by the bank. That will increase their rating, reputation to higher levels. Ultimately, the one topic where I will repeat this sentence, all stakeholders have to work to achieve that sustainable economic growth. That's all.
Other questions, please, from the participants? Do have some questions? You need clarifications? You can speak. Unmute yourself and you can speak.
I will share the PPT with BCIC, which can be to give it to anybody, whoever is interested.
Just want to check up. So just want to check up if CBG projects or biogas projects could be considered under green finance.
Sir, there are some limitations which I read you as per the RBI.
Sorry, I missed that part.
Yes, yes. So there is some classification there, which is important for us to read the para number D. If you see the activities mentioned in para number D, they have given some small exclusion where they are saying, when we are talking about projects which results in reduction of emissions, greenhouse gas control, like that they are saying. At the same time, we should also remember the particular thing which I read it out, projects involving new or existing extraction, production, distribution of fossil fuel, including upgrades, etc., and renewable energy projects generating energy from biomass using feedstock originating from protected areas. For the purpose of these directions, feedstock primarily includes sewage, manure, wastewater, bagasse, biomass, wood pellets. So specifically, they have given some exclusions with respect to biomass and use of livestock, etc., and the feed, etc., for that.
Okay.
Yes.
That helps us. I'll read through the paragraphs again.
Yes, yes.
See, the biogas has a, as you know, it is digestion of the organic waste, and it's also greenhouse gas emissions only. So
That's
mainly
right.
the focus is on using biomass as fuel, which is a renewable energy. So we need to seek this clarification.
The exclusion is there.
part.
It cannot be considered is what the RBI policy says.
Yeah.
In protected areas, please see the language is caveated by protected areas.
We'll review that paragraphs again in detail.
Yes, sir. It's very good reviews.
Yeah. So
See,
the other question
from
I
my
had was
side, yeah, please go ahead.
sorry. Yeah, I was saying, see, in sugarcane command areas where flood irrigation is practiced, if those areas are brought under micro irrigation and hence water consumption is reduced, Can that be considered as a green finance project?
Yes, it is there. It is there. Yes.
Okay. Sure, sir. We'll look at the details. Thank you.
Yeah, from my side, Kesar, what is the current status of Indian green taxonomy? Is it matured enough or because
Underway, sir. Underway. Yes.
Okay. So when it is expected to be?
I think we will be soon having it, sir.
Okay.
Because
Good evening,
globally, this is a global requirement, no, sir.
Yes. Because this is
Good
very
evening.
important, for other aspects of sustainability. We should clearly define our taxonomy as far
So
as.
that everyone understands the same way.
Correct.
Yes.
Good evening, sir.
Please go ahead.
Yep. Please go ahead.
This is Kirtana, Assistant Professor in St. Joseph College.
Yeah.
Sir, I have a question that is regarding green bond investors, or can we find how many number of green bond investors are there in India? Is there any platform website, sir?
I think I need to check only, madam.
Okay, sir.
Yeah.
I'll mail you, sir, if possible.
Yes. Always.
Okay, sir. Thank you.
Yes.
And also, Kesar,
Thank
you
you,
said
sir. Thank you.
the green bonds or the deposits, the interest rate is slightly higher or it is similar to FDs?
As of now, it is similar, but if I have seen the rates are hovering between some 5.8 to some say 8 point something, but it should be less compared to others.
Okay.
Because we get the incremental satisfaction that we have joined in the in the commitment to building the green economy.
Yeah.
Yes.
Sir, how about this average green bond, sir? Is that available all the time, or is there will be specific period? Whenever the project they want, they'll be raising funds, sir?
There are two different things. Today we talked about green deposits, which is a public deposit program of banks. Green bonds are raised for investor.
No, sir. Average green bond RBI issue you mentioned there, no, sir. So I just wanted to ask whether all the time or for any particular project they'll be doing.
They should be on a pipeline. They should be doing it because unless I have told you about the quantum of deposits raised from public for various banks. You would have understood the quantum of deposit is very less. For example, a bank's balance sheet, size of the bank's balance sheet could be some 2 lakh crores. Out of 2 lakh crores, normally 1.2 lakh crores will be deposits on the liability side. Some 80 to 90 will be on the asset side. Given that kind of size for a small bank itself, green deposits is nowhere near. So government has to issue sovereign bonds. Banks have to subscribe and take the money. It is not otherwise possible to fill the gap.
Got it, sir. Got it. Thank you, sir.
Thank you.
Okay, sir, there is another question on greenwashing. You can just read it. It's in the chat.
Yeah. Greenwashing is often difficult to identify. Yes. This is where there are a lot of agencies engaged in bringing out if there are some greenwashing. For example, when I read the UCO Bank's impact report, I was finding that they claim that in financial year 24-25 itself, for 28 megawatts, so much of CO2 is avoided. But the commissioning itself is only in March 2025. So it is not a greenwashing actually. In that case, even a small application of mind will tell you that probably they have missed that particular thing. But greenwashing is altogether different because there is an element of positive effort to do misrepresentation, positive effort to say it is green, though it is not actually green. It's a factual misrepresentation, which is going to hit very hard, and it is a fraud, it's a punishable offense. Previously I have spoken about greenwashing in a big subject like Volkswagen case, NGT 500 crore penalty and all. On another occasion, we will deal with greenwashing cases globally so that we will understand on what greenwashing efforts are being done.
I think the right kind of agencies, if they do assessments on the projects funded by green funds, green bonds, then it will come out. Whether it is truly uh, able to give the output in terms of minimizing impacts on the environment, or it is being used elsewhere to improve their business.
That is why the RBI directions have very carefully structured that irrespective of assessment by third party, independent agency, your liability to ensure end use is proper is remaining with you. That they have made it very clear in the directions.
Yeah.
Yes, sir. So we can call it a day, I guess.
Sir,
Yeah.
Mr. Rajesh Jha is there online.
Oh, okay.
Sir,
Good evening, Rajesh.
Good evening.
Hi, good evening. Good evening. I hope you can hear me. Hello. I hope am I audible now?
Yes,
Yeah,
sir.
Can you hear me?
little
Yeah,
closer
perfect.
to the mic.
Yeah, I'm extremely sorry. So I was slightly, late actually to join the call, but it was really quite well presented. So I must say thanks to Dr. KSRG and of course, Mohanji, thanks for taking it up overall. And I think from my side also the question was actually one small question before we close it. So of course you mentioned about the green financing part. I think there are many projects happening where the kind of companies are providing energy efficient solutions to many customers, right? There, uh, the green financing aspect, like I have seen the energy efficiency is one of the aspects, right? It has been considered. So how this financing happens? Is it like something happens for the customers directly? The customer whom this particular equipment supplier supplies the entire efficient equipment. Okay, is that or it will be given to a company who is providing that solution, who's adopting it or who is providing it, like generally to whom it happens. Believe me, even I'm also in this field actually learning a lot day by day. Of course you are one of the expert in this. You can just slightly throw light on that.
No, as I understood from the discussion with banks and all, it is usual banking activity for them. That if they are raising green deposits, they are able to compelled to put money in green activities. For example, the UCO Bank case, some 45 crore or something is raised, but 78 crore is funded. It means activities are funded as a borrower in a commercially acceptable proposal. But if it is a green activity, they will be able to showcase that we have funded green activity. And if they have accepted green deposits, they have the obligation to fund only green activities. And therefore, it is a normal banking activity. And whether it is the manufacturer level or at the user level, each level funding takes place according to their credit worthiness and credit needs. All other aspects are maintained. Banks may be inclined to give some relaxation with respect to collaterals, with respect to some coverage ratio, with respect to some guarantees of promoters and all. That is a negotiation between, in my understanding, between the customer and that is a borrower and the bank. That's all.
Okay, that's great. Thank you so much, Dr. KS. And I think I could also see like some of the good questions also asked by the participants. So thanks a lot to all the participants today. I think from my side, I must say again, thanks to all of you for making this, of course, entire BCIC's purpose like more successful, because I think the purpose is to make people aware about some of the topics which might not have been understood earlier. In fact, last, the workshop also we had was on the CBAM. I think that was also well, appreciated by the participants. I think this is the way we are going to take it up in coming days also. Maybe I request also to the participants to put their topics, if they are also looking at certain topics that they would like to understand more in depth. So we also will try to include in our upcoming webinars. I think that's only from my side. And thank you so much again, Dr. Keras, VC Mohanji, and entire BCIC and the participants. Thank you.
Thank you very
Thank
much,
you.
sir. And
Thank you, everyone.
on behalf of BCIC, we once again express our sincere thanks to Dr. KSR, sir, for your support, sir. And thanks to the leaders of the committee and all the delegates who have joined for the session. Thank you once again.
Thank you.
Thank you.
so
Have a
much.
nice day.
Thank you.
Bye-bye.
Have a nice
Thank
day.
you. Thank
Bye-bye.
you, everyone. Thank you.